This is Tom Nunemaker with Capital Discussions. This is my trading update for Wednesday, September 17th, 2014. So we had an FOMC meeting announcement today at 8 p.m. my time in Europe, and you can see what happened. The market reacted and sold off. This is the euro, not the US equity markets. So the euro right now is down about, where is it? Here, the euro's down 83 pips at the moment. SPX just closed for the day at 2,158, up 2.6. So the equity markets didn't react too much on the Fed, but the US dollar got stronger, so the foreign currencies got weaker, which isn't great for our euro US dollar trade, but we're still in pretty good shape, and I'll show you that in a minute. Let's take a look at the volatility charts. So here's how the US market reacted. Actually, let me just do a S&P futures. Just do today. 3-minute bars, how to do. Okay, so here's the reaction to the Fed announcement. Market kind of didn't know which way to go. Had like a 16-point range and went higher and came back down. So it looks like it's going to close the futures, within a few points of where it opened. And if we look at the volatility, we had a little vol spike up to about 14.5 in the VIX very briefly, came right back down to under 12, and now it closed at 1261 for the day. The futures for October, November, December, that's these lines here, are all still parallel and no risk of crossing, which means we're all contango, normal condition, no backwardation. So the market's okay with what the Fed gave them today. So let's switch over to option view. Here's the 6E futures option position, expires in 52 days on November 8th. And even with the almost 100 pip decline, 85 pips, we're still at only a 6.77 delta. And remember, we put this on about a 9.5 delta. So we're still a lower delta than where we put the trade on. And you can see it's sold off a little bit. Even with our adjusting, taking a small realized loss, we're still only down 1285 today, and we still have a pretty good chance of making a profit right now. Option view is saying 96% probability of profit. If you look at it on the price chart, actually, because I'm long one extra, let me show you what it looks like just without that extra long. So here's what our profit zone looks like. So we're good down to 124 over the next 50 some days. So it's a big drop, but it's not a huge drop. It's not like 200 or 300 pips. It's less than a penny, and we've got still 450 pips to go before we would actually lose money at expiration. So still quite a ways to go. All right, let's take a look at SPX. So here's my combined SPX position, up $703. If we split that off into the two trades, I've got the one expiring October 11th and the other one in December. The October 11th trade is here, up 552. And if we look at it right here, it's 98% probability profit at expiration and 100% before that. So we might want to start bringing this call side up a little bit, maybe sell some more put credit spreads, or take off some of the put debit spreads, which is kind of the same thing. Because if you take off a put debit spread, you do it like this, right? So let's see, we would buy one of these, sell one of these. That would be taking off one of the put debit spreads, but that by itself is a bullish put credit spread. So kind of the same thing, different name. So that's where we are with the expiring October 11th trade. If we go to December, that trade is here, and that's up $151, and we're basically right in the middle of the tent. So we're just letting theta do its work. Again, this is a very slow trade, still 93 days to go to expiration. If we're trying to get up to one of these lines, it's still going to take 6, 7, 10 weeks to get up in this area. So a lot of time to go on this trade. But if we look at, say, this line, 75% probability of profit, expected return 731. So pretty good chance this will actually make some nice return. But if we look at the combined position, we're negative 37 delta plus 98 theta. We only moved 2 points today, so that was the delta and theta kind of offset each other, so we're plus 700. Here's our combined risk graph, basically very similar to the October 11 risk graph. And if I wonder if I can overlay those or not. Here's the October 11th, and it looks like we can overlay it. Get rid of some of these extra lines so you can see it clearer. Maybe you'll zoom in a bit. Okay, so yes, the purple one does have the December position in it. So you can see how it does raise it up a little bit. So we have a nice combination here. You see what the max zoom is on here. Okay, so that's zoomed into the max. So this is saying in 24 days, when the October 11th position expires, if we're at the same price we're at now, the combined profit will be 1110, and we're at 700 now, or 500. So that would be a nice boost in the profit. Now we would like to raise this up, obviously, and we'll probably do that tomorrow, but for now the position is looking okay. Delta's not too bad, gamma's very close to zero, very flat T+0 line, theta's good, vega's okay, and we're looking good. Wait, before we go, I forgot to tell you I had some trades yesterday. I didn't do a trading update yesterday because I was producing something for the website for the Alibaba IPO. So what I did yesterday is I did close my extra put debit spread on the SPX October 10th expiration, or October 11th. And I had a good total cancel order. I originally bought it for 780 and I had an order to buy it back in at 590. But SPX was opening kind of flat to slightly up, and I thought, it doesn't look like a big risk of it moving down today. So I closed it early at 680, and I think right now it's trading for $4 and change. So it was a good call. It would have gotten filled at the 590 order that I had, that GTC order, but I saved myself $100, so that was good. And as you know, SPX and the whole market rocketed up yesterday. And I also closed the Russell call credit spread that I put on Friday. That ended up making a net, let me bring up my report of option view. That trade is right here. That had a net profit of $850 in 2 trading days, which is great. So that's this closing trade right here. I tried to get it filled as a spread, but nobody would buy it. So basically what I did is I just I bought the shorts back in for 20 cents, and then I sold the longs for 5, and that's about what the spread was going for anyway. So I got it filled, but I had to do 2 separate orders. So sometimes you have to do that. Just be aware that that's something you can do. And you notice the timestamps are off by about 40 seconds or so. So anyway, I just wanted to update you on that before I say goodbye. And now back to the original recording that I did earlier today. So thanks a lot. Bye. So I will see you tomorrow. Thanks. Bye.